Home ownership has been the American dream for as long as anyone can really remember, because the whole idea is you can own a home and build generational wealth, because you can pay down the home and then you can pass this home down to your kids and your grandkids and your great-grandkids. But I hate to break it to you, but your home is one of the worst tools to build generational wealth. Now, I'm not saying don't buy a home or that it's bad to buy a home. What I want you to understand is that sometimes buying a home is not the right answer for you. And what I want to do right now is talk about when it's better to buy a home, especially in this economic environment, and when is it good for you to actually rent a home. And there's a few different factors that you want to pay attention to. The first factor you want to pay attention to is, can you actually afford to buy a home? Number two is, do you have the savings to buy a home? Number three, do you have investments outside of your home? And number four, are you ready to buy a home? I want to talk about the second and third thing together, which is, do you have savings before you buy a home? And do you have investments to actually go on to buy a home? So I've talked about my 75, 15, 10 plan quite a bit on this channel. And what this means now is that for every dollar that you earn, 75 cents is the maximum that you can spend, 15 cents is the minimum that you're investing, 10 cents is the minimum that you're saving. That way now every time you make some money, some of your money's invested, some of your money's saved, and your mortgage payment is going to come out of here. Your mortgage is going to come out of your spending money. Now, in order for you to actually be able to afford the home, not only do you need enough money out of your spending fund to afford your mortgage, but you want to make sure you have a savings cushion, and you want to make sure you have some investments too. Because if you don't have a savings cushion and you go out to buy a home and then the window breaks, or the furnace stops working, or the roof starts leaking, you need money to fix these things. Because when you're a tenant, well, now it's the landlord's duty to fix the AC, to fix the heater, to fix the roof, to fix the broken window. When it's your home, it's your responsibility and your bills that you got to pay. So you want to make sure you have a savings cushion. Now, a good savings cushion is going to be somewhere between 3 to 12 months worth of expenses, depending on how much risk you're willing to take on. So take on your monthly expenses, multiply it by 3, multiply it by 12. That's how much you want to save, not for your down payment, but in a separate savings cushion. That way you can protect yourself against an emergency like your window breaking. Your investments right here, this is what's going to make you wealthy. This is money that you want to make sure you continue putting aside for investments even after you buy a home, because this is what's going to make you actually wealthy. Not the mortgage. Look, your mortgage is coming out of your spending money. The spending money is what makes everybody else rich. This is the money you use to buy your car. This is the money you use to go on vacations. This is the money you use to go on to eat in restaurants. This is the money you use to buy your clothes. This is the money you use to go out and buy things. This makes other people rich. This makes you rich. This protects you against an emergency. Look at where your mortgage falls. Your mortgage falls here because your mortgage is making your banker richer. Sure. Maybe you're using your mortgage to pay down the debt in your home and build some equity, but you're also paying a lot of interest to the bank. And I don't want you to mistake this mortgage or this home as an asset, when it's only an asset if you can sell it for a profit. And you don't know that until you actually sell it. And there's a chance that you won't be able to sell it for a profit. So instead of hoping and praying that you're going to be able to sell your home for a profit, treat it like a liability and make sure you have money to invest. Where do you invest this money? Things like stocks, things like real estate, things like businesses. I like cash flow. That's why the majority of my investments pay me with cash flow. Things like my rental properties, things like my dividend-paying stocks, things like dividend-paying ETFs. If you want to learn more about how to invest your money, even if you don't have a ton of money to invest, we have a free ebook with Market Insiders, which goes over how you can start generating cash flow, how you can start investing your money, even if you don't have a ton of money, and how you can make your first investment. This ebook is completely free, and I'll link this ebook for you down in the description below. And the fourth thing that you want to pay attention to before you go and actually buy a home is, are you actually ready to buy a home? Because if you have a job that's unstable, or if you're moving city to city, or if you don't plan on being in an area for at least 2 years, then when you buy a home, you're locking yourself down. Now you might be thinking, well, if I buy this home, I can sell it in 6 months for a profit. Don't forget that when you go to sell your home, you're going to have fees to pay. If you bring on a realtor, they're going to charge you 6% in a commission. Then you have to pay the title agency. You might have to pay an attorney. You might have to pay a whole bunch of other costs to close and sell the home. So unless you can sell the home for 10% more, you're not going to walk away with an additional penny. Not to mention all the other mortgage fees and stuff you had to pay in order to buy the home. So if you don't plan on being in that home for at least 2 years, you're not ready to go out and buy a home in this area, especially if you want to make money from the home that you're living in. Now again, I'm not saying go out and buy a home for the intention of making money, but think about it. If you're going to be investing into a home that you're going to be living in, you want to make sure that you're going to actually be there to enjoy the home. Now, this is where a lot of people trash the idea of renting a home because they say, why in the world would you want to rent a home and pay this rental fee, but you're just throwing money in the garbage and you're just paying your landlord's mortgage. You're making your landlord richer. And I want to address that for a second because if you wanted to go out and buy this home, let's just say it costs $500,000, that means you would have to put down $50,000 and then on top of the down payment, you're going to have to pay a mortgage. Now, if you wanted to just rent this home, now all you're going to have to do is pay a rental fee in order to live here and not pay that mortgage. But you don't build any equity in the home, you're just paying a fee. And I really like the way that my friend Ramit Sethi puts it because what he says is when you go out to eat at a nice restaurant, do you get upset and say, man, you're just paying the restaurant owner's mortgage, you're just paying the landlord's mortgage here? Or when you go to Chipotle, do you get upset and say, man, I'm just paying these employees' salaries? Because when you go and buy the Chipotle bowl, well, you're paying somebody and you're paying the owners to actually get that bowl. Anytime you pay for anything, whether it's a bowl at Chipotle, whether it's a meal at a restaurant, whether it's a belt at Gucci, it's making somebody else richer. That's the way that our economic system works. The more that you spend, the more that somebody else makes. But in exchange for you spending money, you should be getting some value. When you go out and rent a home, the value that you're getting is a home that you live in. But when you go to rent a home, you also don't have to go out and put down this down payment. You also don't have to take on all the risks of owning a home because guess what? When you're a landlord, you also have your own risks because tenants can damage properties. Tenants also might not pay, which means if you have to evict them, there's a lot of cost for that. Not to mention all the other expenses with managing a property, maintenance, your property management, your insurance, your property taxes, and everything else. So there are risks with being a landlord as well. But now when you go out and rent a home, you don't have to take this $50,000 and put it as a down payment into the property. You can keep this money, which means you can take this $50,000 and use it as a down payment to go out and buy a rental property. Or you can use this $50,000 to go out and start a business. Or you can take this $50,000 and use it to invest in somebody else's business. Or you can take this $50,000 and invest it into the stock market. So if you don't go out and buy a home, you still have the ability to build this type of generational wealth. It's just not in the home that you live in, but you can take that money and use it to go out and invest in something else, into a different asset that should or hopefully will go and grow. That way you can continue to see that money grow. But the key here is not just taking this $50,000 and leave it in your bank, it's putting that money to work, putting it into an asset. Because when you take this money and you put it into your home, you're using it as a down payment to get a mortgage, to buy a home, that way you can hopefully pay down this home. But you can also take that same $50,000 and put it somewhere else that's not your home. So if you don't go out and buy a home because you don't want to or you can't, it's not the end of the world. It's just now what are you going to do with your money that way you can continue to grow your money. The big question that a lot of people have right now is in this economy today, should I go out and buy a home? Should I wait or what should I do? And the key thing that I want you to understand about this economy and really any economy is that when I think about buying a home, I think about like buying a shirt. I don't care about making money from my shirt. Just like that, when I go out and buy a home, I want to make sure that I can afford it, period. If you can afford the home that you want to live in, remember that you're buying it to make memories, you're not buying it to make money. So now, if you can afford the home, you can afford the down payment, you can comfortably afford the monthly payment, and then you get a fixed rate mortgage, well now you don't really have to worry. Because then if mortgage rates continue to go up, it doesn't affect you. You got a fixed rate mortgage. If mortgage rates go down, well then you can just refinance into a cheaper mortgage and save money on the monthly payments and put some more money towards your investments. That's not going to affect you either. If home prices go down, well, you're buying it for the long term and you can afford the monthly payments. If home prices go up, well, good news. You have some new invisible equity in your home. Don't go out and refinance and use that new invisible equity to go out and buy a car or a fancy vacation. Keep that money there and just continue making your payments because when you buy a home, remember, this home, you're buying it like a liability, not like an asset. So treat it like that and use your money to go out and buy actual assets, things like rental properties, things like stocks, things like investments in other businesses or your own business. That way you can build real wealth, not just in the home that you live in, because, well, the worst kind of generational wealth that you can build is by paying down your home. This is great. It's not bad. I mean, it's better than not having any sort of generational wealth, but out of the spectrum of all the different types of generational wealth that you can have, this is the worst one that you can have. If you can build a rental property that will continue to pay cash flow long after you're gone, versus your home will be a money pit. Your home is a money pit until you sell it, and then when you sell it, you hope that you can sell it for a profit, versus a rental property pays you with cash flow. Stocks will hopefully have appreciation. They can also pay you with cash flow, and businesses, assuming you're investing in a good business, will be able to grow and continue to provide you with more value. In 2023, when France announced that they wanted to raise the retirement age when you can start collecting government benefits from 62 to 64, people rioted. They protested, but the bill continued through the government. Also in 2023, Argentina passed a law making it easier for their citizens to fund their retirement by getting